traders, this is Focus Trader and welcome to the first video from the series about our trading system using BOS Trader. And this first video will be dedicated to liquidity because it's the really important and basically basic concept for this strategy. So without any further ado, let's get into it and let's have a look how we seek liquidity, how we identify it, and how we use it. So go to the white chart and let me draw some sort of structure. Okay, I will finish it and let's see. So how do we identify liquidity on the structure like this? We do it using pivot highs and pivot lows, which are basically the lowest bars or highest bars from series of bars. So basically the area where you will search for liquidity will be here, 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 here. Okay, so those are pivot points, and we expect that the liquidity, the pending orders, and other type of orders or decisions to trade will be made here. What I mean by decisions to trade? Well, if you receive some reaction on the market like so, usually people put their stop loss here above the high of these candles or above the high of this structure. And also traders who are expecting price to continue to the upside in the uptrend, because we are currently basically in the uptrend channel, they place their buy stops there. So there are a lot of reasons for people to enter their positions here, and thus creating necessary orders and liquidity for market to grab it. And that happens here because this movement grabs this liquidity. Let me delete all these lines. And so this liquidity was there and it was grabbed here. So this is no longer area with liquidity. Another pivot high was created here. So new liquidity there, and again it was grabbed here. Another liquidity was created here on this pivot high and it was never grabbed. So there is an area where you could expect there will be some orders, stop losses and pending orders, buy stops, and also people who are aggressive and placing their market orders when the price is on breakout. So all those people will be here. So this is the area which will a lot of traders be interested in, and thus we can expect some sort of market reaction there. And another pivot high is here and liquidity was never grabbed, and another pivot high is here and liquidity was never grabbed. Why I'm drawing these lines? Because these lines we use in our trading, and I will show you the indicator that we use for. Okay, and let's go through pivot lows. There is a pivot low here. Again, liquidity was not grabbed until here. So there is a liquidity grab there. And another liquidity is here. And I don't know if I'm making a straight line, but I think that the liquidity was grabbed here. And also there are some minor liquidity grabs here and here. This low and this low. Okay. So this is what we see, and this is what we want to draw on our chart. So if we want to look for liquidity in the charts, we need to draw some sort of lines. So let me delete this and let me go to chart. Okay, so here we have chart and let's identify. Okay, so where we see liquidity, we see liquidity probably here. We see liquidity probably here, and we see liquidity, for example, here. We could also see some liquidity there. We could also see some liquidity get there, etc., etc. I won't take so many time drawing just these simple lines. So these are the areas where there was liquidity and it was grabbed. It was also this liquidity was grabbed somewhere here, and these two are not yet grabbed. But how to decide if the liquidity is not also something like this and this low and this low, and for example this low and this highs and this high and this high? So how to decide which liquidities are valid and which are not? For this we are using the rule of pivot highs and lows, and the rule is simple. You need to specify amount of bars on the left and right which needs to be lower or higher to produce pivot high and pivot low. What I mean by this. So let me zoom in, and let's say that I want to see 5 bars on the left and 5 bars on the right to have lower low or higher high for pivot highs. So let's count. This could be a pivot high candle. 1, 2, 3, 4, 5 candles have lower high than this candle. So this is a valid pivot high. 1, 2, 3, 4, 5 on the left. So okay, this is pivot high using the rule of 5. Is this liquidity? No, because 1, 2, and this candle has lower low than the low of this candle. So this is not the lowest bar from series of bars from 5 bars basically on the left. Okay, and this candle, is it pivot low? 1, 2, 3, 4, 5. Okay, 1, 2, 3, 4, 5. Okay, so this is liquidity. But we know that this is liquidity only after 5 bars happen, 5 bars close, and we know that this bar really has 5 bars on the right and left, which has lower low, because until this candle is closed, we don't know, we don't have confirmation that this is really a pivot low we are looking for. So just keep in mind that you need to wait for 5 candles to close to produce some pivot low. So this is the rule, and by using these rules, you really can build up your consistency in the market in identifying liquidity, because otherwise you are just eyeballing and guessing. But this is not the way I will recommend and I will go, because there's too much discretion, and if you want to be consistent, your approach needs to be consistent, and the patterns that you are looking for will also need to be consistent. Okay, so we marked our liquidities, so let me just delete all these drawings, and let me show you another way we can use to draw this sort of liquidities. So I will turn on our indicator that we created, and I will go to settings. I have fixed mode, and I have setting of pivot highs and lows for 5. So right now don't focus on all these settings, because there are 4 sessions, and I have a video about this indicator. But as you can see, it draws all the liquidities correctly, and it will show you that this candle, for example, is not pivot low, because there are not 5 candles on the left which is lower low than this candle. So you will see now much faster and more clearly, and the most important thing, you will be objective. There is no discretion involved, because you see the things that are set in code, which is 5 bars on the left and right. So this is it, and thanks to this you could really work and build up on your consistency and on your approach. So as you can see, when there is a lot of liquidity and it is grabbed, you usually or very often receive very strong market reaction. There are 2 liquidity lines here, also the third one add up here. So this is a liquidity grab. It happened overnight in Asia session, so this won't be something you will be able to trade, but you can see the liquidity grab and then the market reaction, and here is a failure pattern, which we didn't produce higher high, so we created new liquidities here on the top. And you see that there's no liquidity in this area there. So if we want to continue to the downside, we need to slowly build up new liquidity to sort of get there, or we need to have some strong market movement. So we never know what happens. Okay, so if we go back in history, you will see how this really worked. As you can see, 1, 2, 3, 4 liquidity lines, liquidity grab, strong market reactions. 1, 2, 3, 4 liquidities, grabbed, reaction. 1, 2, 3, 4 grabbed here, very small reaction, minor reaction, and you see the numbers of liquidity that were taken in this movement to the upside. You see that market reversed after that and left some liquidity there to be grabbed later. So we still see very high liquidity area there. Okay, and you can go back in history and you will see a lot of cases when this happened. But